Welcome. In this video, when will the Xcn coin rise start? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a closer look at the chart, we can observe that the price has recently been moving within a stable and reliable uptrend. The upward trend line that is formed clearly shows that buyers in the market remain strong and are determined to push the price higher. This uptrend not only appears visually clear, but also presents a technically healthy structure. Price movements are developing in alignment with this trend line, occasionally touching it and then continuing their upward movement. This indicates that market participants consider this level a reference point and that the trend line has become a strong dynamic support zone. Currently, the price is positioned just above this ascending trend line. Looking at previous price behavior, we can see that each time the price has touched this trend line, it has bounced upward. This demonstrates that this area serves as dynamic support and provides a sense of security for investors. The upward moves following these touches may not only represent short-term buying, but also suggest that investors who want to maintain their trend-aligned positions are participating as well. At this moment, the fact that the price is once again near the trend line may represent an important opportunity for a potential bounce. In technical analysis, touches to trend lines are often considered reaction zones. If this structure remains intact, and the price continues to respect the trend line by reacting upward, new highs could be tested in the near future. As long as the price stays above the trend line, the market structure remains intact, and upward potential will always be on the table. This should be interpreted as a highly positive development for investors. Furthermore, this ascending trend line reflects not only short-term price action, but also the overall market psychology. The willingness of buyers to trade at higher levels and the sellers' readiness to accept higher prices confirm that the market is in a bullish structure. The price nearing the trend line and attempting to move upward from this point is strong technical evidence that this bullish structure is continuing. This can boost investor confidence and accelerate the upward momentum in prices. Especially when we examine recent candlestick formations and trading volume, it's possible to say that there is an accumulation of strength in this region, and that the price is inclined to make another upward move. If buying pressure increases in this area, and the price once again bounces off the trend line to initiate an upward breakout, this could signal a rapid move toward the next resistance levels. These kinds of structures are also referred to as pulling strength from the trend in technical analysis, and are considered a very reliable bullish scenario. The fact that the price is currently holding above this rising trend is considered a very positive signal for investors. Trend lines like this serve as roadmaps in technical analysis. As long as the price remains above this line, the general market direction continues to be upward. This is strategically important, especially for trend-following investors. The price staying close to this support line and frequently finding support there indicates the formation of a technically healthy uptrend. In conclusion, the ascending trend formed by the price supports not only current movements, but also potential future scenarios. If the price maintains its respect for this trend line and continues moving upward, it could lay the foundation for a medium to long-term uptrend. Such a structure allows investors to confidently open positions, increases interest in the market, and leads to greater trading volume. But we can't make decisions based on trend lines alone. Let's take a look at other metrics as well. Stay tuned. Within the dynamic structure of financial markets, technical analysis continues to serve as an important guiding tool for investors. In particular, the formation of specific geometric shapes and patterns in price movements offers strong signals about potential future trend changes. In this context, the ascending triangle formation that has developed on the chart is one of the critical structures that should be carefully analyzed. On the currently analyzed chart, we can clearly see an ascending triangle pattern taking shape. This pattern emerges when price movements are confined within a narrowing channel, defined by an upward sloping support line and a horizontal, strong resistance line. In classical technical analysis literature, ascending triangles are generally considered continuation patterns and indicate positive market expectations. First and foremost, during the formation of the ascending triangle, we observe that the lows are gradually moving higher. This indicates that buyers are entering the market with increasing strength, while selling pressure is stabilizing at a certain level. In this pattern, price movements repeatedly test the upper resistance line but struggle to break through. This shows that the resistance level is perceived as a significant barrier by the market. However, the rising lows demonstrate that buyers are becoming increasingly resilient and determined against the selling pressure. Technically, This can be interpreted as strengthening momentum and fading selling activity. The most critical stage of an ascending triangle formation is when the price breaks above the upper resistance line. This breakout represents a positive turning point for technical analysts and typically signals that the price is about to enter a rapid and strong upward movement. When this breakout occurs, the energy within the market structure is released, and buyers take full control by overcoming the selling pressure. With the completion of the pattern, signals of a new upward trend emerge. On the analyzed chart, this scenario appears highly likely. If the price breaks above the upper line of the ascending triangle, the probability of reaching investor-anticipated targets increases. From a technical standpoint, this target equates to an upward price movement equal to the width of the base of the triangle. In other words, the price is expected to rise by the same vertical distance as the height of the triangle following the breakout, which points to a significant profit potential. Such a move would boost buyer confidence, increase trading volume, and support price momentum. This would lead to increased investor confidence and a prevailing sense of optimism in the market. In such formations, the strength and sustainability of the breakout are extremely important. It's not only about breaking out, but also about the price continuing to rise without a pullback or resuming its upward move after a brief retest, which determines the strength and reliability of the trend. When carefully observing this critical area on the chart, if the price performs a retest after the breakout and uses the former resistance as support, it is an indication that the upward move may be long-lasting. In technical analysis, this behavior is referred to as a confirmation of the breakout and is considered a strong buy signal for investors. The underlying psychology of the ascending triangle formation is the shift in power dynamics within the market. Although the resistance line is a psychological barrier for buyers, the formation of increasingly higher lows shows that sellers are gradually losing strength. This process signals that the market is preparing for an upward move. Once the breakout occurs, buyers fully take control and a strong and sustainable price increase is experienced. Therefore, investor expectations surrounding this formation are quite high, and once the breakout is confirmed, the market is likely to enter a strong uptrend. The RSI indicator is a highly effective and widely used tool in technical analysis for identifying price momentum and overbought or oversold areas. On the chart currently under review, we can observe that the RSI indicator is showing a clear uptrend. This uptrend is a strong signal that the balance of power in the market is shifting in favor of buyers and that prices will continue to move upwards. A rising RSI trend indicates a positive acceleration in the overall sentiment of the market. Buyers are becoming more active and selling pressure is decreasing. This rising trend line formed by the RSI is also an important reference level that supports price momentum. From a technical point of view, the fact that the RSI repeatedly touches this rising line and then reacts and moves up again indicates that prices will continue to rise steadily with this momentum. When this rising RSI trend runs in parallel with price action, it provides important confirmation that market strength is increasing. This is because the RSI indicator has the ability to signal earlier than price movements. Therefore, when the RSI touches this rising trend line and moves forward with support, it shows the energy and motivation necessary for prices to make a similarly strong upward movement. RSI trends are important for us. Yes friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.